Hey guys, welcome to today's price action analysis video. This is the price action analysis video of the 21st of April 2022 and I'm on the daily time frame right now. I wanted to show you this. I had said in yesterday's video that it was a bullish harami pattern and it is important to see when the high of this particular red candle is broken, that is the 19th April candle is broken, and you can see that it has been broken with a big bullish candle today handsomely, which makes me believe that 17,000 has acted as a strong support to price, and this is a very strong reversal sign. Now this is a very strong reversal sign to the downtrend that we have seen here, where Nifty has been consistently falling, and now I believe there has been a nice support at around 17,000, and now price has reversed from there after taking a nice support. So we had marked the high and the low of this particular candle here, and today you can see that it has been handsomely broken to the upside. This is a very good sign. Okay, and one more thing here was that if you had seen this area here, you could have seen that there was a long-term support also to price here at around the same level. So you can see this price action like this. See the kind of support that price has taken around this area, around somewhere around this area, right? So this was a long-term support that price has had, and you can see the wick on the bottom here. Okay, so that suggests that there might be there already has been a reversal to price today. Anyway, but it's the market, so we cannot really predict the market. Anything can happen, but this is what technical analysis has shown us at this point. Okay, now let's get back to the intraday chart of Nifty. So this is the intraday chart of Nifty and a beautiful rally today. You can see here. Let me just turn on the pivot points and we will see where the price opened. Okay, you can see here that price has opened at the R1, and this particular line here is the weekly pivot here. Okay, and you could see that this is the PDH, the previous day high, and price opened above the previous day high today. So it was a nice gap up opening today, and the gap was sustained today. Whenever price sustains a particular gap, the chances are high that that day will be a trending day. So you can see this low here, and you can see that this candle here has also taken support at that same low. So the first candle was a bullish candle. Yes, it had a wick on the top here, but even in spite of that wick, this was a fairly strong bullish sign. And then the next candle that was formed within the first candle, and it was actually this particular candle here which broke out of that range. So up until then, price was within a contraction period. That kind of a price action was seen, and it was a 9:45 a.m. candle, that broke out of that contraction zone. And then you can see that price again went into a sideways zone here. That was because the gap was providing some resistance to price here. Okay, it provided resistance, and then the 10:50 a.m. candle broke out into the gap with a strong green candle. Now when that happens, that is a very bullish sign, and you could see that the R2 was right above here, but the R2 has not been able to stop price today, and price went and hit the weekly pivot here. This is the weekly support. Okay, and it was, in spite of it being a support today, it acted as a resistance. You could see how it has acted as a resistance here. You can see that price has taken resistance here, and after that it breaks out. So that is how the weekly pivot has worked today to provide resistance to price. Price kept going on in a sideways zone for about an hour before it broke out of the weekly pivot, and then you could see how price rallied after that. I was expecting price to reach the R3, the daily R3 pivot, but it did not. And here at this point, after the 12:40 p.m. candle closed outside the weekly pivot, which is here. Okay, and that was broken, and after it was broken, after a long consolidation of about an hour, I had taken a position in the market today. As you can see from the order book, I had taken a long position in Nifty. I had bought today, the 17,350 call option, and it was the main expiry. Okay, it was the monthly expiry. It is not today, it is the monthly expiry. Why I did not short put option? Well, you have always asked me what is better, option buying better or option selling is better, and is there any way that people with limited capital can trade. So I wanted to show today how you can trade with a limited capital even on an expiry day and not worry about theta decay. So this was a breakout pattern, and I wanted to show how you can be successful even buying options, and it is not just that option sellers make money in the market. So if your direction is right, then this is the way you can make money. So as you can see, at 12:51 I had gone long on the 17,350 call option at 174.53 premium, and I had closed the position by 2:17 p.m. at 190 rupees. And my plan was not to close the position there. My plan was to close the position at the R3 pivot, as I just mentioned. But why I closed the position there I will show you here. See, at that point when I closed the position at around 2:17 p.m, you can see the candlestick here, the 2:15 p.m candle in Bank Nifty, and this is the candle right here. I'll just highlight it for you. See, this is the candle, and that candle had actually gone and hit the R2 pivot, as you can see here, right at 2:17 p.m, and there was a chance that the price might have taken the resistance, it being a daily pivot, an important level, and it might have reversed. If Bank Nifty would have reversed, Nifty also would have reversed. But yes, the Bank Nifty did not stop there. It actually went and met the R3 pivot also. It also achieved the level of R3 pivot, and but then Nifty could not reach the R3 pivot. In fact, Nifty was going stronger in the earlier part when Bank Nifty was actually lagging. So you can see here that Bank Nifty was going sideways for a long time and not really doing anything, and you can see the sort of acceleration that Bank Nifty gave from here to here, non-stop rally. So that was not the case in Nifty. Nifty, you could see that it had actually gone into a small consolidation here, and it went into an hour of consolidation here, but otherwise you could see that Nifty was going in an uptrend almost the entire time right up to this here. And then after that, Nifty actually went into a sort of a sideways kind of a pattern here. So it was Bank Nifty that rallied late, and Nifty that rallied earlier. But you should not be worried about such things. You should go by the rule, and I had booked my profit right at this point where Bank Nifty had met the R2 pivot. So I had booked my profit in Nifty at that time. So I had booked my profit in this particular candle in Nifty. That was at 2:17 p.m. And this is what I wanted to show you. This is the way you can buy options. You can always work in the monthly options. I'm always wary of the fact that option buying means that you are running against time and theta is against you. So you're always crunched for time, and you're always rushed that time should be by your side, and whenever the market keeps going sideways, at that time you are always hurried, and you don't really keep positions open for a long time, and you run away quickly with your small profits for the simple reason that you think that if it wastes a lot of time, then it's going to cause a lot of theta decay. So if you are working in the monthly options, then that is never a problem. But I would give you a word of caution here. I always work on limit orders. I never work on market orders. So be sure not to work on market orders if you're working on option buying or even option selling or anything else. Whenever you place orders, always make it a habit of working in limit orders, for the simple reason that you will find a large difference in the spreads, that is the bid and the ask prices in the monthly series, much more than you would find in the weekly series. So weekly series, you will not find a lot of spreads, so you will not lose a lot of money there in terms of slippages. Okay, so that is the trade I wanted to show you today, and I will explain to you why I took that trade there in a bit. Let's just check out Bank Nifty now, and then we will go back to the Nifty trade. You can see here that Bank Nifty had a very narrow CPR. I had said in yesterday's price action video, there's a single line CPR, and it's such a narrow CPR. So such a CPR is never really a good indication of a reversal sign. Okay, so you should always look for breakouts and trending patterns today. So you could see how the first candle itself broke out of that range, of the previous day's range. You can see the previous day's high is right here, and how it broke out of it in the very first candle. It was a very strong candle, so you could see how the price broke out of the first of the PDH. The very first candle itself broke out, then it took a small bit of resistance in the very second candle, and it reversed right to the base of the first candle. Now what was the low of the first candle? It was right here, and now you can see that price had made this particular low right up to here. So actually it was this candle, which was it, the 10:20 a.m. candle, that actually made a strong candle. But then you can again see this pattern here. Okay, this is a morning star pattern. It is a reversal sign in a technical analysis, and if you've not studied this, then please go ahead and study price action. This is a morning star pattern wherein you see a red candle here, and then you see this sort of a doji, and then you see this kind of a green candle, which suggests that there is going to be a trend reversal here. Anyway, going forward, you could see that this was the resistance, the initial resistance that price had set, and you could see that that resistance was never convincingly broken up until this particular candle. What was that candle? That was the 12:40 p.m. candle, and the 12:40 p.m. candle broke out of that range, but price again gave a reversal, and then again at the base of this candle it made a kind of took a support, and then here was the new support here. Then you could see that none of the candles really actually closed below the wicks, so no real reversal sign there. Whenever you see such kind of patterns, you should always see whether you see any reversal signs there, whether you have seen that there is a preceding uptrend. Okay, you will see that there is a pattern like this here, which looks like an evening star pattern. I said that this is a morning star pattern, right? So this looks like an evening star pattern, but it still doesn't mean anything because there is no preceding trend here. Okay, here you had a preceding trend, so it means something when it is formed here at the base, but there is no preceding trend here in the second instance, so this is not going to act as a reversal sign like this. Okay, so after this, what do we see? We see that the price had rallied right up to the R2 pivot, and it took just one candle. It was the 2:20 p.m. candle, and it took just one candle to break out of that R2 pivot. And if you see that this was 2:20 p.m., we can measure this like from 2:25 p.m. So in about an hour, Bank Nifty shot up 200 points today. So it just took an hour to shoot 200 points for Bank Nifty. And in contrast, you can see here that Bank Nifty with the opening, when it opened at the PDH, right at the PDH, if we measure from there to R2, it's 200 points. So it took the a time of from 9:15 to 2:25, or rather let's say 2:20. Okay, it took 9:15 to 2:20 for price to travel 200 points in Bank Nifty, and then it took just 1 hour for price to travel another 200 points after 2:30 p.m. So you can see how the acceleration came in Bank Nifty today. That is the price action analysis in Bank Nifty. Now, as I said, let's just go back to Nifty, and I'll tell you why I had taken that trade in Nifty today. I had spoken about this in one of my prior videos, that in days when there is a strong trend in the market, I rely upon a method taught by an American trader called Oliver Velez. He talks about the importance of the 20 EMA. Now he says that whenever there is a strong trend in the market, then at such instances, whenever you see that there is a slight pullback towards the 20 EMA, then it's called a mean reversion, right? So whenever there's a mean reversion, that is price goes away from the 20 EMA. Like for instance, here the price was so far away from the 20 EMA, you can see this. And so when price is so far away from the 20 EMA and it's trading right above the 20 EMA but running away from it, there is a time when the price is going to dip back to the 20 EMA and is going to come very close to the 20 EMA. Okay, so at such moments, whenever there is a reversal of price or a pullback of the price towards the 20 EMA, then at such times, you know that the price will take support at the 20 EMA and will bounce from there. So whenever price bounces from the 20 EMA, it is your opportunity to enter that sort of a market. So you can see here that this rising line is the 20 EMA. And throughout the entire day up until this point here, the price has not really kissed the 20 EMA. It hasn't touched the 20 EMA. It briefly touched it here. This single wick has touched it here, but the body of a candle hasn't touched the 20 EMA throughout the day. But now you can see here that all these candles right at this point are in the vicinity of the 20 EMA, isn't it? They're very close to 20 EMA. So where is your best place to enter? You can enter at a place where you can get good support from the 20 EMA as well as some other pivot there. Now why I traded in this particular red candle was because I had seen that price had taken resistance at the weekly pivot a couple of times here as well as here and around this place before it broke the weekly pivot. So once the weekly pivot was broken, this was my breakout candle and my entry to go long. Okay, my signal to go long. Now you will ask me why I did not go long on this candle here. Why I did not go long on that candle? Because do you see that the 20 EMA is anywhere close by? It's so far away. So where do I keep my SL here? Is that a good place to keep my SL and enter here? And where do I take my profit then? So that is not exactly the correct way to enter. I had seen that price had taken resistance at the weekly pivot, and breakouts are always strong whenever they come after a long consolidation. Back-to-back green candles and a breakout, or back-to-back red candles and a breakout is not a breakout pattern you should follow. So likewise, this candle broke out of the weekly pivot, and I also saw that the 20 EMA was close by, so I could take a good entry by placing my stop loss below the 20 EMA, and now I needed my entries somewhere around this area. So this is where I had entered, and my plan was to collect my profit at the R3 pivot. But then, as you saw, since Bank Nifty had come to the daily pivot, I decided to take my profit there, although I had not done 1:2, but still I decided to take my profit there and not stay in the trade. It is always best to get out of strong trends before the trend exhausts. So you never know when the trends exhaust, especially on expiry days. And so that is the reason why I was happy to book my profit early. Fine, so that was the trade entry that I wanted to discuss with you. Mind you, do not engage with this kind of a strategy on sideways days. Okay, whenever the EMAs are pointed sideways or are floating sideways, don't even attempt to take this kind of an entry. So you cannot just take an entry just because you see an EMA that is a little bit far away and now the EMA is flattened. And if the EMA was flat here and had I seen a green candle form like this here, a pin bar or something, then would I have taken this trade? No, this is not the trade to take because the EMA is already flattened. You can only take this sort of a trade when the EMA is sloping upwards like this. Okay, so don't make that mistake. You can see that the entire day the 20 EMA was sloping upwards and it was never ever sloping sideways. Okay, so on days like these you can see that the 20 EMA goes sideways. So here I don't even have the 20 EMA turned on. I never in fact have my 20 EMA turned on. Sometimes, very rarely, say once in a month or once in 2 months or something, I tend to take trades based on the 20 EMA. It's a very rare phenomenon, but nonetheless, since it's a powerful phenomenon, I do tend to take trades based on it only on days where I see that the trend is really strong. Based on today's price action, let's check what levels we have for the upcoming sessions now. We can remove this level here. The gap, it can be shortened now. See, now this will be the small gap that is left to be filled. So a very strong bullish trend we have seen today, and we can mark one level here, which is the previous day high, which has given us a resistance at this point at the 10:20 AM candle, and then it was broken by the 10:50 AM candle, and then price has not returned to that level. But I will not mark that level for the simple reason that the S1 pivot is very close to it. Okay, so we already have the S1 pivot marked, so it's okay if you don't mark that extra level there. We have a virgin CPR on top coming from the 19th of April 2022, and we have a virgin CPR coming from yesterday, and we will also add a virgin CPR from today's price action. Okay, so we have 3 virgin CPRs going forward in very close vicinity of price. Let's take a look at it from the 15-minute time frame also. This is a higher time frame analysis. There's one level that is important on the 15-minute time frame, which is this level right at the weekly pivot where I had traded today, but since it lies right within the CPR, it's best that we don't mark that level today. So today's PDL will be an important demand zone now, so I'll just mark it like this. To be sure that it's a zone, we'll just mark the level in this format. Okay, so ensure that it's a zone, so that zone is respected. We also see that there's a weekly pivot coming there where price has exactly taken support today. So it's a group of 2 pivots, a weekly pivot and a daily pivot for today. And tomorrow we will have the PDL, which is a demand zone there. Okay, I think that's it for Nifty. Let's head over to Bank Nifty now and check how Bank Nifty gives us levels today. One important level that you right away can see is this particular level, which has been broken after quite some time, and it has provided good resistance to price. But what we will do is we'll not mark it since it lies right within CPR. So again, best to keep the charts as clean as possible. We all have that gap there, it still is open there. We have a virgin CPR on the top here, so it's best to mark that and extend that box. It's coming from the 19th of April 22. Okay, we have a very strong demand zone, the PDL, so let's just mark that level, and let's go to the 15-minute time frame and we'll mark a box there. The high of the 19th April is going to be a strong supply zone here. Okay, but since we have the gap exactly at that level, I have not marked an extra line there. Okay, all these levels I will be posting on Twitter by the evening, so please ensure that you take down these levels from the Twitter. Alright guys, if you have liked this video, please hit the like button, subscribe to the channel and hit the bell icon so you're notified every time I post a new video. Thank you guys for watching and for your patience, and I'll see you in the next one. Bye bye.